I just want to address something that we've been talking about over the last couple of sessions, and it's something that affected Dean, and it's important because we've got a basic system that works really well, and we know that if we work with trend, then we're going to win 64% of the time. And how do we establish trend? Well, it's in the basic setup, which we cover in the mainly the first seven videos, but briefly we sell below the white line and we buy above the white line. The only variation on that is if we lose this red line, which is the 20 EMA, moving average, and we drop below it, then we can take a sell down to the white line. And if we break the red line above the 20, we can take a buy up to the white line. And those are the variations. And then we have the signals that come in like this, these green signals on the Fu Manchu. If we zoom in, so we had the sell signal above the 0 line here and here. We're already below the 200, so we can take any of these, and we could have got in about here, so that's momentum rising, which would have been at that point. Take our short setup on that candle there. We have a 0.36% for the stop loss, and then we take the profit down to 0.76, which is there, and that gives us a more than 2-to-1 risk reward ratio. And then you can set your stop loss there and your take profit down there. The thing is that let's say it reverses and it goes against you. Now we can see that we are in a downtrend now. If we zoom out and make note of that area on the 1 hour chart, you can see here that we're in a downtrend all the way down from this point here. This is the high on the 18th of April, and ever since the 18th it's been coming down. So we're working with trend. So that was a very good trade, and we must always work with a trend. Now, if you are in a situation where you've already had that trade and it's a winning trade, and the situation hasn't changed with regard to the histogram bars on the WADR, then you could take a continuation trade. So let's assume that we're going to clone that. Right click, we're going to take it again where that one closed out, which was there. Okay, for another one. We would have been stopped out. We would have been stopped out very soon with that candle there. So that would have been a losing trade of 1471. And one of the biggest dangers with these continuation trades is the likely retracement. And that's what we saw. We saw a big move down, and then we had the retracement back up. So it's best really to wait for another signal. That one was no good because it was below the 0 line, and that has to be above the 0 line. And then we had a buy signal come in, and it's a very good buy signal because we've also got bullish divergence. This green line is suggesting that it's oversold, so a good place to buy. And we would have waited till that candle is breaking the white line there, and it continues, breaks the red line, so we can put in a buy here, long position on that candle is fine. Take it up to the 200, and that gives us 83%, a minimum stop loss of 0.36, which is there, fine, good. And then we can continue it, but we always know it's probably going to reverse after a move like that. So we did see it reverse here, So the next point we could probably pay attention is when we get that buy signal there, and then we could go long up there for the continuation of the trend. So what I'm trying to say is, over the last few weeks we've been showing how profitable laddering in to a position is, where we are working with a trend up or down, and we know that the trend is likely to move in our favor. So when you're taking these laddered limit orders, if you're working with trend and it goes against you, and you're not paying attention to the Fu Manchu and what everything is telling you on the charts, you've got two choices. You can either reverse your trade, or you can start using the laddering system, because we know it will come back eventually. But you have to be very, very careful with the laddering system, because you need to make sure that you enter where you've got strong support and resistance lines. Enlarge the whole thing. Okay, you can see it's up, down, down. Now it's gone up. So the next move will probably be down. But where will we be playing our limit cells? Where are the strong support and resistance lines? Well, from this point here, we were right at the very bottom, because we've got strong resistance there, which was respected, strong resistance there, which was respected, strong resistance there that was respected. We had the resistance there that was respected, and it went up. Okay, so we need to find somewhere much further north, which would be around this area here, where we have a resistance line here, and they failed to get through that resistance line on these attempts as well. So it would be considerably further up, nearer the 200. So your first limit entry would be all the way up there. Then that would average in your price from down here to up there to this area. Okay, but you'd still be in a negative, because it's still moving north. So where's your next resistance? It's going to be in this area up here. So your next entry, you can see you've got resistance, 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 this area here, resistance. So that would be your third entry, and I would suggest that your third entry is your last entry, and if it still starts to go wrong, then you can either reverse the position or just wait it out. And you could be in it for quite some time before it actually does reverse back down again. Because remember, if you take that one, your average entry position is somewhere in this region, which means it hasn't got to drop very far for you to get back into profit. So I hope that's helped. Thanks very much.